So, welcome to a new episode of the 21 Shares podcast Off the Block, where we have some of the smartest and most interesting minds in the crypto space on and off the blockchain as guests. Today, I'm particularly exciting to have Ryan Watkins, co-founder at Syncracy Capital, as a guest. Ryan used to be before at Messari, and I always enjoyed very much reading all your research reports, also the ones that you now publish with Syncracy Capital. And I think a big one was the Solana piece that you did, I don't remember, 1 or 2 years ago.
Yeah.
And very happy to have you here, Ryan. Thanks again for taking the time. And you're also going to be like our last podcast for the year. So we're going to talk about like a little bit about this year, but more forward looking about the next year. Two of the big theses that you have, like, is the cycle broken? Yes or no? There's been quite a lot of like opinions on this. And also if crypto is ready for prime time, if you're at the beginning of the S curve, which I think is also very exciting. About Ryan, I gave a quick intro, what you're doing, but I think like most notably, like you saw the resurgence of Solana back in 2024. You were early user of Hyperliquid. And I think there's also like a bunch of other stuff where you were like very ahead of the market. So Max and myself, we're very much looking forward to this conversation with you. And with this, we start with the first section, which is always our 10 rapid fire questions. So I ask you, Ryan, please stay short in your answers because we want to talk about a lot more besides the rapid fire questions. Over to you, Max.
Hey, Ryan. Hope you're doing well today. And yeah, we're going to start with some rapid fire questions. I like to call it good cop, bad cop. I'm obviously the good cop, and then I'll hand it over to my little bit more fierce partner in crime here, which is Darius. But the first question I have for you is, obviously you've been in a space for a long time. So I was wondering, when did you realize that crypto was more than a cyclical trade?
In 2018, actually, it was like the first bear market that I ever experienced after like experiencing the highs. And I'm sitting there, and obviously all my bags are down 80%, and I'm thinking to myself, like, why am I even here? Like, there's not an opportunity to make money anymore. The market's just kind of died. And I think it was actually in that period that I developed the conviction that this was going to change everything long term. And I think what I viewed it as in 2017 was just kind of a narrow technology for reimagining money. But then I think in the bear market, I actually understood it as a general purpose technology that we could use to reimagine a wide variety of applications in money and finance and technology. And I think it was from that point on that I was like, all right, I'm willing to take the bet here. It's still really early. All this stuff that we got excited about in 2017 were just white papers or just like experiments, but I'm willing to see this through.
Makes sense. And I'm jealous of your whole time in the crypto space. I mean, that was back when I was still in school. Congrats on that, and congrats on surviving, multiple difficult bear markets. And I think the next question ties in quite nicely, since you have seen so many boom bust cycles throughout the years, is what's one crypto narrative that you think investors should or can finally let go of?
Should get let go of.
It's a difficult one.
Yeah, should let go of is an interesting one. I mean, maybe just one thing that's very topical, but I just think that the L1 trade is dead. And what I mean by that is not that all the L1s are going to zero, but we've kind of experimented. We've pushed all these L1s out. We've experimented with all them. We've experimented with every single consensus mechanism, all these different applications. And I think what we're starting to see is we're starting to all coordinate around a couple of winning standards, which to me are just Ethereum and Solana. And at this point, the incremental L1 that's coming out is just not offering anything that's unique enough to get people to get off of those standards. So while I think Ethereum, Solana have ways to go, like higher, I think the field is just worthless at this point. And I'm not ruling out the possibility that there could be a new smart contract platform that comes out in the future that offers some functionality that we're just not even thinking about today. But I just think that as I see it right now, like this trade of you just buy any L1 in private markets or even early in public markets, and then you make like crazy multiples. That's just done. Like it just doesn't work anymore. I think people are tired of it. And you've already seen this, I think, over the past couple of years. Like all the new launches have just been terrible. They've been down only.
Agreed. And on that point, I think internally at 21 Shares, we're strong believers of the fat app thesis, and that a lot of that value accrual that maybe was previously seen through L1s will move towards the application layer. And to your point on the, two standards that you mentioned at the moment are winning, Solana and Ethereum. Do you think that in the next 5 to 10 years, Solana will be able to surpass Ethereum in terms of, let's say, a valuation metric?
Yeah, it's definitely possible. I mean, when we originally wrote our Solana thesis in late 2023, or at least like published it late 2023, we wrote it, I guess, earlier. I think Solana at the time was like 5% of Ethereum's market capitalization. That just seemed like it was a huge relative mispricing. And the thesis that we had at the time was really simple. It was just that Solana was faster, cheaper, and if we were going to have another cycle where retail came onto blockchains, this would be the place where it would all happen because you can actually trade with high velocity and it's cheap and you're not going to overwhelm the underlying infrastructure. And that seems like it's played out, but I think to uh, much surprise, Solana peaked at about like a third of Ethereum's market cap earlier this year. Uh, and that is just like far from where like I think any of us thought it would be as like the most bullish people in Solana. And you have to ask yourself a question, okay, is the market just still wrong? And is there is there a reason why like the gap is not closing? And I think for me, uh, what Solana still needs to prove out is that there are it can win out use cases beyond meme coin trading. And I think that throughout this year, what Solana has start to show is the signs of that happening, right? So if you this kind of isolate meme coins as its own thing and look at Solana, this Solana economy beyond meme coins, it's actually improved substantially since then. So you have like the rise of prop AMMs and you have spot trading now for majors that is becoming a big driver of growth for Solana. I think it's winning in payments. So you have like, the Visa announcement that came out yesterday. You have Square, you have like all these Western Union, all these payments companies that are now moving over to Solana and choosing it as like the premier destination to do payments. And I do think like the whole internet capital market stuff, with like MetaDAO, and like all these new issuances that are happening on Solana are kind of like really, really positive as well. So if it starts to, these use cases continue to grow and compound, then I think you can start to make a compelling case that this should actually be rivaling Ethereum. Because right now I still think that there's many institutions and there's also just many institutional investors that still default to Ethereum as like the standard. Like this is the second largest asset outside of Bitcoin. It's the number one smart contract platform. Maybe at a surface level, it has all the metrics that they care about, like the stablecoin supply, the stablecoin volumes, right? The assets that are in smart contracts, the lending volumes. And I think that if Solana could just make progress there, and especially in like these like real use cases, then I think the case is really strong. So I'm still bullish on the Sol ETH ratio from here.
So are we, Ryan. It feels like you've been reading some of our most recent research publications, but we have a very aligned view in that regard. In that, Solana is proving use cases far beyond some of the early year speculation that we saw on top of its blockchain. So let's see that ratio close out potentially throughout the next few years. And you mentioned on-chain metrics. I think it's difficult to just label them as on-chain metrics, as it depends on what subsector in crypto we're looking at in terms of what the importance of a metric or not. But for the layer one or the blockchain, or we like to call them, your platforms for innovation, what is an important on-chain metric that, investors can look at to gauge the performance of these L1s?
The performance or like the competitiveness.
I would argue the latter in that sense. Into how can we compare them as apples to apples through a metric on chain?
Yeah, I think it's a mosaic. I know like one metric I really like to use in 2020 and 2021 was just total transaction volumes. If you were to stack up payments in the native asset plus all the stable coins, that can give you a sense of how much like volume is being settled in the system. And I thought it was like a good way of measuring almost like a GDP like index. But uh, there's just no single index. I mean, I think the revenue that applications are generating on the blockchains is very important because at the end of the day, these are platforms. I think they're multifaceted. There are many different subsectors on these smart contract platforms that are relevant, and I think you want to be able to capture the platform potential of these smart contracts platforms. So I think like application revenue is really important. I do think that chain revenue is important as well, although that's like a long debate on what exactly is like the meaning of this. I think that exchange volumes are really relevant here because I think that's a key way that these blockchains can generate fees. And then I think payments as well. And then maybe the last thing is I think total value locked gained like outsized importance in the 2021 era when what people were doing was just yield farming on blockchains or really liquidity mining incentives. And I think since then there's been kind of like almost like a pushback on the use of this metric because it's not meaningful. Like there's just a bunch of assets sitting in smart contracts. Like how relevant is that if they're not being put to work? And I think that is like true. But I do still think it's a relevant metric because people don't put their money into contracts if they don't believe they're safe. And I do think that the more assets you have in contracts, it is a vote of confidence that the financial infrastructure on there is safe for people to use. So I do think that's a relevant metric as well. So like I said, it is a mosaic. There's no single metric, but that's also because like these are multifaceted platforms.
That makes a lot of sense, and I think one thing that people and investors should keep in mind as well is, as you mentioned it, not gauging just one single metric. Because had you done that in the early 2000s with the wave of early internet companies, just looking at your PR ratios, for instance, you would have seemed or would have looked like these equities were overvalued when in reality you were missing the bigger picture of how the internet is going to reshape commerce and all the things that we see nowadays. So I think it's a similar story with blockchains and crypto infrastructure in that regard.
Yeah, I think one thing I'll say too is that it's important to understand the intentions of the people who built the system. And what I mean by that is like, what did they actually want to build? And then I think evaluating like the product relative to those intentions. And it doesn't mean that just because a founder says I'm building money means that it is money, or they're saying I built an exchange in this exchange. But it is important because I remember back in 2021, people would compare the fee generation of Ethereum to Bitcoin. And the Bitcoiners would be like, listen, this is a proof of work cryptocurrency. The fees go to miners. They're not meant to accrue to Bitcoin holders. And we're building digital gold. So the purpose of digital gold is just to just stay there. It's like there's 20 million coins. That's never going to change. And anyone in the world can verify this using a node that they can run. And that is what Bitcoin is. Like it's not going to introduce smart contracts. It's not going to introduce rollups. Like that is just all it is. So then to compare it using this one metric, let's say like fees, or using another metric like say total value locked, it's just apples to oranges because the intention of the system is not to be that. And I think the same thing could be said about say like Ethereum versus I don't know a Hyperliquid on the other end of the spectrum, where Hyperliquid's intention is not to be the world's ledger, right? Where there's roll-ups that are settling transactions in state down to Ethereum. Hyperliquid's intention is to be an exchange, right? So it makes sense that you'd want to assess Hyperliquid on the volumes that it can directly monetize itself, right? Because they're just clipping fees from it. Whereas for Ethereum, it's just not the business. It's just not what it is. It's just something different, right?
No, I appreciate that insight. I think it's a very good point. And for people out there listening, make sure you don't miss that nuance of what the value proposition actually is of select crypto assets that you may be interested in looking at. And then my final question to you before I hand over to the bad cop Darius is he doesn't like that name, but that's what I'll always call him. What is the most misunderstood thing about institutional crypto adoption? Because it's, been around now since let's say the launch of the US spot ETFs in January of last year. But I think people maybe had been expecting a little bit more movement on price, perhaps. But yeah, what in your opinion is the most misunderstood thing with institutions coming on chain?
Hmm. So I wouldn't say that this is like a misunderstanding, but what I will say is that this may be a blind spot for the crypto natives. Is I think they underestimate uh not necessarily how slow these people move, but how patient they are. And what I mean by patient is not that these people just wait a long time for the perfect entry. What I mean is that when they are building exposure, they're not just going to go and top blast a chart like you would if you're trading on Hyperliquid. These people might build a position over the course of like many quarters, if not years. And when they're underwriting these positions, they're not underwriting them to flip it because price goes up by 50% in a 6 month period. They're underwriting these positions to hold over like a multi-year horizon. And I think almost paradoxically, these institutional folks may be better equipped to handle the volatility these days than some of the crypto native traders, because the crypto native traders are the ones that have become short term from trading meme coins all the time. They become short term because they're using leverage and trading perps. Meanwhile, like these institutional folks, they're actually not deterred by the fact that Bitcoin pulled back from 120K down to 80K. These people are just buying, and it's just par for the course. They're prepared for it, and I think it's almost like like there's almost like some irony in it that like it's like the crypto natives can no longer handle the volatility while the institutions can. Um, so yeah, I think that's like maybe, like I said, not like a misunderstanding, but almost like a blind spot people have is that the people that are buying this stuff right now from these OGs that are selling, these people are really long term, and they actually
It's
may believe in this stuff more than even the natives do now.
Agreed. It's that patient institutional capital. I think some people were expecting,
Yeah.
a switch that goes on and off, and all of a sudden you have billions of dollars being invested. But as you said, these positions are built over quarters and years. And to your point on crypto traders, maybe it's just been the fact that there's a lot of people out there that have been burnt by quite a few cycles, and so that short termism and the fear starts to kick in with every 5 to 10% drawdown. Anyways, I'd like to hand over to Darius now, who's going to continue your questioning, Ryan.
I mean, as you already said, Max, I disagree with being the bad cop. I leave it to you, Ryan. You can, at the end of the podcast, tell us if I'm a bad cop or not. I disagree, actually. But let me just continue with the question. I'm very interesting. There's always a lot of like narratives floating around in crypto, some of them dying out. If we talk about like NFTs or like gaming or metaverse, don't seem to be very relevant right now. Maybe they pop up again. The question I have for you is like, which narrative are you currently, and maybe for next year, 2026, the most bullish on?
Yeah, I think so I will say that this may be contingent on kind of legislation in America, but I'm becoming more excited about just DeFi again. And if you look back to the end of 2021, which was like the peak of last cycle and probably like peak excitement for DeFi, at least in terms of valuations, many of the leading protocols were trading at like, I mean, like hundreds times forward earnings. I mean, it was just these things were tremendously overvalued, and the revenue was also super cyclical. Like, what were people doing? What was driving the revenue? It was just us trading coins back and forth and levering it. And since then, and you could also say this is like the entire asset class, and DeFi is just like a microcosm. But like it's this, everything's just kind of been rationalizing lower since then. It's just been down only. Like doesn't matter what Bitcoin did. The story of the cycle has been Bitcoin up, alt to zero, right? So you've had this huge rationalization over the past 4 years since that peak, and now we're at a level where I think valuations have rationalized. Doesn't mean they can't go lower, but they're now at levels where they're reasonable again. Like they're in like the high teens or 20 times, and it kind of resembles like the S&P 500 multiples. And you start to ask yourself, okay, well, it's not enough that these are at reasonable multiples. It's like, what is actually the go forward outlook. And if you were to kind of just look at this blank slate and not be burdened by how hard and difficult this has been the past 3 years, uh, the setup is actually really strong because I think you have like all the regulatory agencies that are, I mean, not just taking their foot off the necks of all these DeFi players, but actually actively promoting the growth of this stuff. I mean, you have Project Crypto by SEC, and Paul Atkins says he wants to move all like U.S. Securities onto blockchains for the next 2 years. I mean, I think he's more bullish than even me on like the timeline for this stuff, right? It almost sounds like unreal that that is like something that the SEC would say. And then you have the market structure bill, which hopefully will pass at some point next year. We'll see. And that would also create like a really, I think, healthy framework for DeFi where it's like clear what, licensing or reporting requirements they have or don't have relative to centralized intermediaries. And I think once you actually have all these things in place, then there's nothing stopping all these assets coming onto blockchains, like real world assets, like stocks, bonds, real estate, whatever it may be. And then I think that's when DeFi takes its next leg higher because and it's an important leg higher because it's not just that okay we get another like speculative bubble. It's this is actually the S curve. This is where you have like real like blockchains providing real utility to society in the same way that we have stablecoins providing real utility to society, and how you see like the stablecoin supply and stablecoin volumes just going up and to the right consistently, regardless of what the price of Bitcoin's doing. I think that's actually what DeFi can start to look like over the coming years as we start to get this influx of new capital and new assets onto blockchains. So I actually am becoming really excited about DeFi for the first time in a long time.
I think that's also very exciting to hear because like I think DeFi for many like of the not last but the cycle before was their first like big use case. And then cycle 2020, 2021, we had like NFTs, which onboarded a lot of people. Um, would you say it's also like the revenue sharing and that like most or like many of those DeFi tokens were like more like mimified governance tokens that nobody's really using for the governance, but they were afraid of the SEC and being like classified as security, that like this new stance of the current US administration will also have like a big influence on it? Like not just like, let's say the tech, which we see with Hyperliquid, being able to be competitive with its centralized counterparts while offering like all the benefits of blockchain and decentralization. Like what do you see as like the key enabler on within the DeFi sector?
Yeah, so I definitely think that I think that stronger investor protections are definitely like a big part of the story as well. You know, I think it's been really hard for many people to like trust that when they buy a DeFi token that they actually have a claim on the economics of the system. And I think it was always like implicitly promised that like if you own a token, you get the economics. And I think that implicit promise was enough for a long time. But I think as we've seen over the past 4 years, like people are just like getting to the point where they've seen so many ways that this goes wrong. Like the team gets acquired and the token goes to zero, or the team actually has a labs entity that actually captures all the revenue from like a front end interface, and then the token holders don't get anything. And then, at a certain point, people get tired and they vote with their dollars, and these tokens perform poorly. And now we're kind of getting to a world where like we actually have the right SEC to actually give these people these projects the ability to just finally just get rid of its two separate cap tables and just align all the economics around a single token. So that is like a important prerequisite to making these assets investable. But I think, as I said before, what gets me excited is like now that we have the foundation of okay, we have like these investor protections, like now we can build from there. And like because it's not enough that okay, like great, we have tokens that accrue value and there's like no value to accrue because these things aren't being used. So it matters is that there's actually going to be this like S curve growth because we have, like I said, like the right set of like regulations in place, and also like real participation from institutions and enterprises to actually get the right set of assets on the blockchains so that we can actually start to grow again. And also you get this stuff distributed as well. And I think a prerequisite to distribution is once again just having clear rules and regulation on what actually are DeFi protocols and are these assets actually like legal to offer to our clients. And I think that's all being cleared right now.
what would be the biggest risk to your long-term bull case, both for, let's say, DeFi, but also the crypto market in general? Because if you look now, like all the stuff that we had as risk in the past, regulation, and stuff like that, it's not an issue anymore. So
Yeah.
what in your case, let's say, what could like not make this a reality going forward? What's the biggest risk actually right now in this market? Is it just us staying like mainly a crypto casino, or be seen as like a online casino? Is it like, what's the biggest risk actually?
Yeah. Yeah. So I think maybe I'll just focus on long, because like there's like shorter term ones I think are like less interesting to talk about. Like, oh, there's all these coins sitting in treasury companies, and to the like whatever, right? Um, to be honest, one that I've been thinking about recently, and I wouldn't say that this is something that like I am like really worried about, but I was looking at this and I was surprised. So there's never been 2 years in a row where Bitcoin was down, right? And which I was surprised about. And 2025 is looking like it'll be a down year for Bitcoin, right? And I mean, I personally don't believe in the 4-year cycle theory, but if you do believe in it, then 2026 is also going to be a bad year. Even though like it's ridiculous, because if 4-year cycle theory was real, then 2025 would have been a parabolic year. It just hasn't been that, right? It's been, I think by many measures, it's been a bear market. I think since like late 2020, 2024. But what I'm thinking about for next year is, if this kind of macro setup plays out the way that I think many people think it will, where Trump takes over the Fed and he finds all these different ways to inject stimulus into the economy ahead of midterms, right? By pulling levers at the Treasury and pulling levers at the Federal Reserve, right? Um, Pulling levers for like the banking sector. This is obviously really bullish for like any debasement trade asset. Like gold has obviously been doing really well. It's up 60% this year. Silver has also done extraordinarily well. And I think those two will probably continue to do well next year if Federal Reserve central bank independence is in question and the dollar is almost like actively being debased. If Bitcoin cannot do well next year as well, because it didn't do well this year, then I do start to wonder how much that splashes cold water on the thesis, because this is prime time for Bitcoin, right? You have all these institutions that just bought it on the premise that this would behave a certain way when the dollar is being debased, and Nasdaq is performing well. And if Nasdaq's performing well and the dollar is being debased and all the debasement hedges are performing well and Bitcoin is not, then it starts to break people's models for how Bitcoin is supposed to behave. And they're like, wait, hold up. Like, what is the purpose of this in my portfolio if it's like not even good tech beta and it's also not a debasement trade? And I think that'd be pretty, I think, like I said, it's not like existential for Bitcoin, but I do think it would take some time for us to recover from that as an asset class, if that is the case. So I am thinking about that. And as we know, I think right now, for better or worse, all this stuff is just intrinsically linked. Like if Bitcoin's doing well, there's generally like a rising tide lifts all boats phenomenon. Doesn't mean everything goes up, but like there's opportunities to make money. And same thing with vice versa. Like if Bitcoin's going down, like yeah, like nothing else is going to do well.
Something also interesting in, I mean, you have been in the space for some time. I've been in the space for some time. It comes up in every cycle, quantum computers. I have my opinion just because we're talking about potential threats, and I feel like it's coming up more and more again, like currently. Just, Ryan, what's your take on quantum computers? Are they like an existential threat for crypto? Are they not? How do you see it?
Yeah, so that's another like thing, big long-term threat that I think many people have been uh rightfully brought up. And as far as I understand, like there's theoretical uh there's no longer any like theoretical roadblocks to creating quantum computers. It's an engineering problem. And the question is like, okay, what is the time horizon? Is it something that happens in 5 years, 10 years, 20 years? And no one knows. Like no one knows. Um, what it seems like is that there are ways that we can mitigate these risks. Uh, but I think the challenge for maybe Bitcoin specifically, and once again, like this, I don't think that this is what is going to topple Bitcoin. But the challenge for Bitcoin specifically is that there's an incredible amount of inertia in the developer community, and it's really hard to push through upgrades. I think people seem to be complacent, and I think that's an advantage that maybe other ecosystems have, is that because they are, maybe more centralized, or because there's a general culture around upgrades and just like getting ahead of these issues, they will probably be able to address it sooner rather than later. Whereas with Bitcoin, like there's a chance that like I don't know, China develops like a quantum computer and they take Satoshi's coins and they start dumping them. Like you just don't know what could happen. So yeah, I do think it's probably the largest remaining risk for Bitcoin, to be honest. But yeah, I think that we'll find a way to figure it out, because it also is like a highly telegraphed risk. This is not like a black swan event if it happens. Like this is very predictable. And I think because it's predictable and there's probably a good amount of time, that people will figure it out.
And I agree. And I also like to say that there's like bigger like honeypots that you can crack with quantum computers than crypto at the
Yeah,
moment.
we have a
So to
lot
be
of issues.
fair, like there's still like as a like just thinking like economically, I would like just attack TradFi rather than crypto. Um,
Yeah.
but yeah, I mean it's fun. It always comes up. Yeah.
Yeah.
Maybe the last question I have, and I think we can skip like the 4-year cycle because you talked about it, and go straight to the why crypto is at the beginning of the S curve. Last question from my side before giving over to, in my opinion, the bad cop Max, is how would you describe crypto in one word in 2026?
Transition.
You want to elaborate on this?
Yeah, I think that like I had many near misses with crypto in high school, but I'll say that I like really joined the industry about 8 years ago. Like that's when I became like obsessive about it, and I spent like all my waking hours towards this industry. And I think in my 8 years since being here, this is like the largest transition period I've ever seen. And it's like everything from like institutions accumulating while OGs are diversifying their wealth, to enterprises positioning for like S-curve growth while all these like natives become disenchanted and burn out. It's governments telling you that they're going to put every asset class onto blockchains, while like these like day traders that get frustrated because you know the lines of their charts are moving the wrong ways. And then you have like these emerging markets people that are like celebrating the democratization of finance, while all these people in the US talk about how this is all a casino. And you know when I say it's a big transition period, what I'm really talking about is how for a long time we were kind of in our own little bubble, and we could just build products for ourselves, and we could just speculate on these coins and just trade them back and forth among each other and just make money, and just so long as more retail people were coming in, it was like this great thing. And now, like, it's time to deliver the promise of blockchains to society. And I think as we do that, like, that is creating like a huge turnover in leadership, as far as like the people who are like the right people to go and do that versus right people who are to bring this from 0 to 1. And also, it's creating a shift in investor psychology. I think it's going to require people who are like longer term and more patient and more fundamental. It also is kind of it's also a difference in like the types of builders that do well is too. It's like you need to be competing not just amongst your peers in the crypto economy. You need to be competing within like the global competition of capitalism, right? Because if you want capital, you need to you're competing with every other business on earth. So like you need to earn the right of an investor for investors to like give you money, right? And if you want to actually build like a product that people use, well, yeah, like if you're building a stablecoin product, then you got to go compete with Stripe, and you got to go compete with all these big players. If you're building an exchange, if you're building some new brokerage platform. You have to go compete with Robinhood and interactive brokers and all these players. And I think there's just a lot of people that just, I don't know, they just saw this industry as a way to make easy money. And now that it's no longer easy money, they're kind of checking out. And I think in contrast, there are a set of people that like really do believe in this stuff, and they're seeing like the setup emerge in the United States, like all the regulatory tailwinds, all these institutional tailwinds. And they're like, all right, you know what? You guys can go check out, but for me, it's actually game on because this is what I've been waiting for. Like this whole like we just trade coins around in circle thing, and we just extract money from each other. That stuff was silly, but this stuff is real, and this is kind of like what we've all been dreaming for if you actually believe in this technology. So, yeah, I think 2026, like I said, it's just transition is the word because uh, I just think it's kind of what 2025 has been, and I think it's just going to continue in 2026. And I don't know if that's like bullish or bearish. I think it just depends on what your seat is.
Well, it's honest at least, right? And and
Yeah.
and at the same time, I think that ties into what you mentioned earlier as well about the fact that, you know, TradFi is converging with crypto, and this doesn't happen overnight. And so these transitions, they may take a year or two before you actually see the implementation phase or how that actually affects, digital asset markets. We already heard your kind of opinion on the 4-year cycle. You're in the same camp as us in that regard, in which we don't believe that the 4-year cycle holds true any longer. And we do think that due to the entrance of TradFi largely, and also the fact that regulation is now a tailwind, not necessarily a headwind, means that we're seeing a slightly different market that's maybe tied more closely to, structural growth due to the fact that institutions are now in. And I guess maybe transitioning away from just whether the cycle is broken or not, I think given your stance already, some investors or people out there might be thinking, well, if that cyclicality has gone away, what framework or how can we think about this going forward? And I think your core thesis is, we are going away from boom bust and more towards secular growth. So what does that mean? And would you like to shed some light on your thesis here?
Yeah. So I still think there will be an element of boom bust. I think this year has been a big bust, for example. Like, I mean, you look at like an index of altcoins, and I mean, I'd imagine it's down like 40% year to date. And that probably understates how much pain there's been because there's many altcoins that are down far more. And there are also many more that are down far more from the actual highs, right? And like, not everyone actually bought these things at the beginning of the year. They might have bought them at some point in the middle of the year when they were much higher, right? So I think it's still like the boom bust dynamic will continue to exist. And one thing that I pick up on just in my conversation with people, or even just going on Twitter and some of the public spaces, it seems like the biggest unspoken fear that people have going to 2026 is that we're there's no more map of the territory. I think like when the 4-year cycle was a relevant theory, uh, as much as it might have been painful for some people to accept, at least it provided you with a sense of like there's a path here. Like, okay, like I get it. We're gonna be in a bear market for a year, but then the cycle will turn and have an opportunity to get disgustingly rich again. And I think having that as like a core belief system uh provides some sense of grounding for people, even in the most difficult moments. And if the 4-year cycle is actually starting to break down, well, that means that we actually have no idea what's going to go on anymore. And you can't appeal to like, this authority of like the 4-year cycle. We're kind of just like lost. And that's like the last thing people want to do because then they're on their own. And they're gonna like their favorite trader is gonna maybe tells them one thing, and then another favorite trader tells them another thing, and that's just not where no one wants to be. Um, so yeah, like I just think that like we will still be in a boom bust, but I think that what matters more is just looking at everything from first principles, right? So uh, you have to look at, okay, well, what are the macroeconomic conditions here? I think like one big difference between now and say 2021 is that one of many things that the 2021 bubble was the fact that the Fed just started raising interest rates off zero. The exact opposite dynamic is happening now, right? You also look at okay, like economic growth in the States, and it looks like maybe PMIs could actually be inflecting next year, right? If there's more economic growth, then that's obviously better for the economy. People have more money. Uh, you look at what like President Trump is going to be doing, like I said, with the Treasury and Federal Reserve and just kind of gassing the economy. These are things that are stimulative. But then on the flip side, you look at, and then here's the thing too, is you look at, where expectations are for, at least for our asset class heading into next year, they're really low at this point. One chart that I actually have looked at, I've been looking at this so much lately, is you look at Bitcoin in gold terms. Bitcoin peaked in gold terms at the end of 2021. It is down in gold terms in 2021. And this is despite the fact that we've had like ETFs, all this institutional adoption, Bitcoin strategic reserve. I mean, everything you could imagine. It just hasn't been enough for us to make new highs in gold terms. So what does that mean? We pulled forward expectations so far in 2021 that we're still paying the price today. And I think 2025 has been an awful year. Heading into this year, we had extremely high expectations. In fact, you can even argue that the end of 2024 was the closest we've had to like a blow off top since 2021, because that's when Taylor bought $20 billion of Bitcoin in a quarter. That's when Bitcoin went up from 55 to 110K in 3 month period. That's when you had the AI agent meta. When these things went up to $10 billion collectively, you had hype go from $3 to $35 billion in a month. And then you had Sol go to $300 after Trump launched his own meme coin right for inauguration that went from 0 to $70 billion in 2 days. That was a ridiculous time. So heading into this year, we had enormously high expectations for what the Trump administration would mean for the crypto economy. And you think about what's happening next year, I mean, expectations are pretty low. I don't think I talked to like a single person that's just like extremely bullish next year. And why is that? Because sentiment is just a lagging indicator of price action, right? So, I don't know. All to say, I just think that we just have to look at the market for what it is, rather than trying to apply some weird framework that's a sample size of 3 to it.
I mean, to reply what you said, and I think you're gonna agree. Usually, when the entire market is very bearish, it's usually a bullish sign for the market, and vice versa. So I hope that's gonna be the case for next year. And you already talked a little bit about this year, about next year. We sadly have to wrap up the podcast, so we gonna be soon at the end. Maybe the last question I have for you: what are some of like your predictions for 2026? If you have to share like a couple.
So I'm actually in the process of writing my predictions, just like internally with my team. I haven't actually wrote any of them yet. Um, but
Actually, we just published our market outlook a week ago, and we had a webinar 2 hours before talking about our predictions. So we very much are in the same boat, but very keen. Like if you can spoil some of them already, like some expectation for next year by Ryan Watkins.
yeah, all right, I gotta think of these on the fly. Well, I think Bitcoin will make new highs next year. Uh, like I said, I maybe this is also just like I already kind of gave like the counter thesis to this happening, which was just like imagine a world where Bitcoin does not make new highs next year, and it's this big disappointment because people are like, all right, it's supposed to be this debasement trade asset, and it's just not behaving that way. Maybe it was just like another way of saying like I actually do believe this is going to happen. So I think Bitcoin will make new highs next year. That being said, while that happens, I do think that the rest of the asset class is going to be more or less of the same as it was in 2025, where there's just a ton of dispersion. Some assets may do well, most will do very poorly. Um, I'm also bullish on ETH BTC uh, in the first half of next year, and I wouldn't say this is like I wouldn't say this is like a full year view, but I do think that tokenization stablecoins will be the probably arguably like bigger themes than like Bitcoin as a debasement asset next year. And I think Ethereum is the index asset for this. And I do think that so long as Tom Lee can continue to buy or just like basically accumulate a couple $100 million a week in cash to go buy this thing, it should lead to relative outperformance as well. And I do think that uh, I also am confident that Ethereum is starting to turn the ship again. Maybe another one is that I think next year will be a year of kind of like enterprise blockchain 2.0. So I remember actually in 2016, this is before I became like obsessed with this stuff. I actually did go to Consensus 2016 because I was like, all right, this is like the world's largest blockchain conference. Let me go to learn about this stuff. And to my surprise, I was like, why the hell is it like IBM and Deloitte and Microsoft that are like the key sponsors and speakers of this event? I'm like, this shit is boring, man. I'm like, it's like enterprise database stuff. And the reason why it was boring is because like, yeah, like I don't want IBM to be running my blockchain. I want to be like Ethereum. And I think it seems like we're actually gonna go through like another wave of this, where you have, Stripe launching their own blockchain, and you have like Canton, which just kind of seems like a TradFi cabal, and you have, all these like enterprises that are starting to launch their own little consortium blockchains, and there'll be many more that come out next year as well. And I think maybe the difference this time around is that I think that it's more believable because there's like actual like regulatory tailwinds for tokenization to take place in these platforms or for payments to take place in these platforms. So I do think it'll be like a key narrative at some point. But I do think that, and I don't know if this is something that happens in 2026, but I think eventually people will realize that, one of the core challenges that any of these consortium blockchains will have is that they're not neutral. And if I'm like a payment service provider and I want to use a blockchain as infrastructure for payments, am I going to use Tempo or am I going to use Solana or Ethereum? And my guess is I'll probably use Ethereum or Solana because it's a neutral third party. It's like literally the internet of value. It doesn't matter who you are. You can just use this. You can settle transactions, and you're also not lining the pockets of your competitor. Whereas like if you're using Tempo, I mean, regardless of like what the architecture is underneath the hood, if they're able to make permissionless, if the validator says it's sufficiently distributed, you're like, dude, Tempo, like the Stripe guys own like a big chunk of the supply. It's their own blockchain. Like, why am I doing this? Like, if I'm Square, why am I giving Stripe my money? Like, I just don't know. I just don't think they'll do that. So maybe that's another prediction for next year. I do think that at some point we will get a renewed set of surgence of interest in Deepin in addition to DeFi. And that's another sector that, uh, well, maybe I'll even zoom out. It almost seems like right now sentiment is so poor in the asset class that people are starting to view this entire project of blockchain as a subset of fintech, which is just like hilarious because like we went from at the end of 2021 blockchains were literally going to eat the world and everything was going to run on blockchain rails. I mean, people were literally talking about how blockchains were going to transform culture because people are buying NFTs. And now we just collapse all this into, oh yeah, this is just a subset of fintech. It'll just be payments and tokenization. I think that's wrong. And I think next year, and maybe take a little bit longer, but we'll start to see a resurgence and like deepen again, where like the multiples also have come down substantially since the 2021 period again. And there are like a small handful of deepen projects that are scaling revenues. And what's interesting about this is that these are recurring revenues, right? Not like these very cyclical ones that you can argue DeFi protocols have. It's pretty consistent growth. And all it takes is just one breakout deepen, and I think that the entire sector will attract a ton of new interest. And I think it'll be good for the crypto economy too, because it'll kind of unlock that part of people's brain that's been dormant the past couple of years. That is like this stuff is bigger than just finance. We can use this to reimagine so many different sectors of the economy. So that's another one I have. I'm trying to think if there's any like more predictions for next year. I don't know. Maybe I'll leave it at that for now.
Thanks a lot, Ryan. I mean, if you need other ideas, Darius mentioned it earlier. Our State of Crypto was published last week, so feel free to read it. And of course, that's also for our audience. Feel free to check it out. And also feel free to check out, obviously, Ryan and Syncracy Capital's outlook, which should be coming in the near future, as he mentioned. Ryan, I wish we had way more time with you. It's honestly been a real pleasure. I'm glad our views are mostly aligned mind, which means I am thinking about the industry in the right direction. So we
Or we're
appreciate.
both wrong.
Yeah,
Or
we're
we're
both wrong.
yeah, exactly. Or we're both wrong, in which case, yeah, we'll see next year. It's been a real pleasure. Honestly, it's been great talking to you. Thank you for joining our show. Is there any final thoughts that you want to share with our audience before we wrap up?
No, listen, I think like this is a moment in time where I think there's a lot of pessimism in the industry, and there's many reasons, I think valid reasons to be pessimistic about the way that this year has played out. Uh, but I think this is one of the worst times to check out because, I just think about my entire time here, like how real this entire project of blockchain has felt. And this is by far the most real it's ever been. And it's just whatever it takes to just survive through whatever this period of pain is. Maybe it's going to be short lived, maybe it lasts another year, who knows? You want to make it through because on the other side of it is going to lie like the actual super cycle, for lack of better words, that I think everyone's been waiting for.
Thank you, Ryan. Appreciate it. And well, maybe next year we'll do an outlook for 2027 as another
Yeah.
follow. Appreciate your time. And for our audience, say thanks to Ryan, subscribe, follow, and make sure to tune in for the next episode of Off the Block. We will be taking a short break. Even though crypto markets are 24/7, Darius and myself, we do have friends, we do have family that we need to see and catch up with. So we'll see you in the new year in what we hope is a positively bullish transition year. Thank you all for joining. Take care and happy holidays.